welcome to this special crossover edition of the Aberdeen podcast's Macro Bites and the Sustainable Investing podcast. My name's Stephanie Kelly. I'm the Deputy Head of the Aberdeen Research Institute, and I'm delighted today to be joined by Eva Cairns, Head of Climate Change Strategy at Aberdeen and host of the Sustainable Investing podcast, alongside Jeremy Lawson, Head of the Research Institute and Chief Economist at Aberdeen, and Anna Moss, our Climate Change Scenario Analyst at Aberdeen. So thank you all so much for joining. So let's kick off. So the reason that we have this special crossover edition is because we talked a lot on this series, on both series, about climate change and COP26. And now that COP26 has ended, this episode is going to bring together policy and sustainability expertise to review what's actually been achieved. And listeners to this podcast will be aware that I think we went into COP26 relatively skeptical about the likelihood of really substantial shifts in the global policy environment. Indeed, we published an article a while back called The Last Chance Saloon, where we talked about what we needed to see at COP26, but our concerns that we were unlikely to see the sort of tests that we set out being met. So for this episode, we're going to go through those tests and talk about what we had originally said we hoped to see, and then compare what's actually come out of COP26. So let's kick off. Anna, I'll start with you first. Our first recommendation for COP was that countries should upgrade their emissions reduction targets so that the total envelope of global emissions is compatible with keeping temperatures at least 2 degrees below pre-industrial levels. So Anna, do you think that initial condition has been met by the agreements we've seen at COP?
So over this year, we've seen a number of countries revising their targets in advance of COP, but we entered the conference with pledges that were still resulting in projected temperature increases well in excess of 2 degrees. COP26 has delivered enhanced ambition, and the announcement that's been made during the conference do now have the potential to orientate us towards a world below 2 degrees of warming. And that's a landmark moment. It is actually the first time that governments have come forward with targets that are sufficiently ambitious to hold global warming to below 2 degrees. However, many of these pledges are still just plans for plans, and there's little structure that's been set out for how they will be achieved and financed, or reliance on as yet undeveloped technology, for example. So we need action plans to halve emissions by 2030 and not just vague longer term ambitions. So even if all pledges are adequately and timely implemented, the best case scenario sees global warming of 1.8 degrees, which is well shy of the key target of 1.5 degrees. And that's, as I say, the best case scenario. And every fraction of a degree really matters. Each fraction produces changes in the climate system that will rapidly become irreversible. So the 1.5 degree target is not something that we really can haggle over or compromise. And that was an important part of the wording in the agreement that we've seen come out of COP, this tightening up of the loose language that we saw with the Paris Agreement of well below 2 degrees. So that was part of the Paris Agreement. And really the new agreement does reaffirm the importance of limiting global warming to 1.5 degrees, but that requires urgent near-term action that we haven't seen really being forcibly implemented. Really importantly as well, though, is that this reaffirmation of 1.5 degrees is backed up by an agreed change to the ratcheting mechanism. So negotiators have agreed to bring forward the date to revisit and strengthen the 2030 targets in NDCs from 2025 to 2022. And that's really important that we have these near-term and frequent chances to really hammer home that need for the 1.5 and to ensure that action is in place and is being implemented adequately in the near term.
Thanks, Anna. I think that gives us a good sense. I might actually, before going into some of the specifics in terms of the announcements we did get at COP, I might just ask Jeremy, Anna just mentioned there that at a best case scenario, the commitments are consistent with 1.8 degrees. But a lot of people will have seen that there are other kind of models that have come out since COP that suggest that the promises are consistent with something larger than 1.8 degrees. What are we to make of the different modelling outcomes that are coming from different providers.
It's actually quite complex to model the relationship between what, as Anna described it, plans for plans that often lack detail onto something as complex as the future energy system and therefore emissions pathways. So that's point one. The second point, though, is that the inconsistency isn't quite as large as it looks because, for example, the climate action sort of tracker, which I think is what you're referring to with regard to estimates that actually would sort of suggest that the more probable pathway given sort of credible actions and commitments is something closer to 2.4 degrees, is that that's the difference between like a realistic assessment of what is being done and planned and then a best case scenario if all of these vaguer plans, including for the more distant future, are realised. I think the other really important point in the climate action sort of tracker analysis is to say, look, in order to keep the goals of the Paris Agreement alive, you need very, very substantive action this decade. And actually, when you scrutinise a lot of the plans and targets and pledges, a lot of the action within them is being deferred until after 2030. And that just isn't going to, that's not going to cut it, because most analysis suggests that actually your hopes of keeping 1.5 degrees alive sort of die unless you very, very substantially reduce emissions by, say, 7% per annum over the next 8 years. And I think that for me is the essence of the credibility gap, is that it's very easy to make pledges on a time frame that you're not going to be in power for, you're not going to be held accountable for which sort of technologies don't even exist that actually sort of allow them to meet. And demonstrating action today. And I think if that was one of the tests of COP, is to demonstrate clear, concrete, binding action within timeframes that leaders are accountable for, then it's failed on that basis.
Right. So really a cheerful note to start the conversation on, but a useful one. I think it can be confusing for people seeing these different estimates of what kind of a path we are even on. But maybe if we get into the detail, then there were two kind of big, well, maybe three big global kind of multilateral agreements announced. And Eva, I might bring you in here. How significant is this global methane deal? And maybe you could just explain to people what the global methane deal does, says, what it promises, and where some of the gaps might be.
Yeah, absolutely. I think it's really important that methane is addressed specifically because it does represent around 70% of global greenhouse gas emissions, and its warming potential is actually much higher than CO2, so around 80 times higher, and it also only remains in the atmosphere for much shorter time periods, so approximately 12 years versus about 300 plus years for carbon. And that's why people have said in the short term it's really important, if we address that we could make a difference to the concentration of greenhouse gases in the atmosphere. So this global methane pledge aims to reduce methane emissions by 30%, at least 30% by 2030. However, I think what is really important, it's been signed by 103 countries, but the largest methane emitter, China, is not part of that pledge, and others such as India and Russia have not signed up. Although saying that, I think China did address that point in their letter with the US, and saying they will collaborate and work on reducing the methane emissions. So I think it is really important that methane is being addressed, that it's understood where it actually comes from and how potent it could be. So some of the main sources are actually agriculture. So through, we talk a lot about burping cows, and, that process of the digestive process, particularly of cattle, but also rice cultivation. So agriculture makes up about 40% of methane emission. And then the second biggest one is fossil fuels. In that space with in the oil and gas industry, and then also waste and biofuels. And so that we actually try to tackle that and have some specific targets is really good. And what it suggests that if actually that was delivered, 30% reduction by 2030, it would reduce warming by 0.2 degrees by 2050. So that would kind of be the estimated impact. But as I say, this is obviously a pledge that needs to be translated into binding actions, as we've talked about earlier. So So I think it's going in the right direction, and it's great that we have methane specifically targeted in this way.
Can I jump in on that, Steph, at all?
Yeah, sure.
Just to be clear about what the scale of the challenge is here. So by the middle of the century, the global population may have increased by another 2 billion people, right? Most of that increase is going to occur in countries where meat consumption and caloric consumption is lower than it is in the typical advanced economy, right? So methane emissions have to be reduced against a backdrop in where one of the very key drivers is working against you, and where in many countries, the agricultural lobby is very, very opposed to some of the changes that are necessary in order to achieve these outcomes. And that's just in agriculture. In the industry sector, I think there are also going to be sort of big challenges about precisely how that's regulated, and whether federal authorities, including the US, even have the authority to make these restrictions in the way that is necessary. So again, it sort of just emphasizes the importance that we tend to anchor on these numbers, 30% by 2030, and as a worthy, lofty, necessary objective. But we're a long way from having plans that would consolidate it.
Sure. And maybe, Jeremy, I might stick with you then, because the other question I wanted to ask about was the coal phase out that was announced. And there seemed to be a lot of controversy, obviously, about exactly the language that will be used in terms of talking about phasing out coal. What's your take on what ultimately was included in the communique?
So what was included in the communique was the words phase down, not phase out coal. The original draft had phase out, but some countries, including India, but actually I don't think exclusively India, right? I think that India's probably become a lightning rod for some of the criticism of that language. But I think there are other countries that actually behind the sort of the scenes are not unhappy with that language either. And look, I think that's just a recognition as much as anything that for some countries, they don't have viable alternative technologies at the moment. Or maybe another way to put it, and I think we'll get on to these just transition sort of points later on, but I think it really links to this quite closely. The task of decarbonizing on a 2050 pathway is more difficult for a rapidly growing developing economy because the reduction in carbon intensity per annum has to be larger when you're growing rapidly. Similarly, the financial mechanisms to achieve it are more constrained, particularly whilst you're sort of focused on poverty reduction goals and the like. Right? And so if the developed countries were really serious about phasing out rather than just phasing down coal, they would be doing a lot more to support that transition in countries like India, but not exclusively India. And they'd actually be doing more at home because actually, coal has not been phased out, even in countries for which it is actually more technologically and financially affordable to do so. So I think that it's important within our discussion here to recognize that coal is becoming a diminishing portion of the global energy system. We expect that to continue. It's carbon intensive, it's relatively high cost. It's going to play an ever reducing role in the energy system, but the speed in which that happens matters a lot. At the moment, it's too slow, but this can't just be foisted on the emerging economies as their problem to deal with. It's a global problem.
And that brings us really nicely actually to the second recommendation we had in advance of COP, which was that as many advanced economies as possible commit to net zero 2040 targets. The reason being that it would ease the burden on emerging markets and increase the likelihood that the Paris objectives can be met. Jeremy?
That did not happen.
It did not happen.
It didn't happen. The advanced economies are still focused where they have targets on 2050. Many of those already lack credibility. But again, unless you really think that the emerging market complex is going to have completely decarbonized, or at least in a net sense by 2050, to make 1.5 degrees a realistic possibility, then the rich countries must decarbonize faster. It's the only way to get the math to add up, which again brings us back to why ultimately we haven't meaningfully changed our assessment of the fact that it's more likely that the world is going to blow through 1.5 degrees. There's a higher chance that we can hold warming to below 2 degrees, but that the most likely pathway is something in the low 2s.
And on that, I mean, obviously there's some disappointment in terms of the advanced economies, but Eve, I wanted to bring you in here on the role of emerging economies, and specifically in spite of all the challenges they do face. And as Jeremy pointed out, India's maybe gotten the blame for some of the softening of language on the coal front, but actually we saw some improvements in terms of India's emission reduction targets. Can you talk a bit about that?
Yeah, I think emerging, the developing world and emerging markets are still coming to the table. And obviously, as Jeremy was saying, if we're not seeing those enhanced increases from the developed world by 2040, they're sticking to 2050. So the whole question of the just transition and the obligation of the developed world to go faster and allow the developing world to grow and develop and, raise the living standards of their population is a really challenging topic. So we're still seeing India have set net zero 2070, Indonesia net zero 2060. And however, some of these nations are also linking that. I think Indonesia has done that on the support, so that they need financial support to actually be able to achieve that. And that loops back round to the question of climate finance provided from the developed to the developing world, which clearly, again, isn't something, I think, that was a major failure of this COP, to actually support, for the developed world to support that challenge for the developing world to reduce carbon, so mitigation, but also adaptation. And so nevertheless, I think they're coming to the table to say India net zero 2070, but also 50% of electricity coming from renewable energy by 2030. And just I think not necessarily fairly getting the blame for maybe weakening some of the language when they have this situation of trying to protect their economies and their population, whilst at the same time being as ambitious as they can be. So I think on that front, when we look at 90% of emissions and actually of GDP is not covered by net zero pledges, but we do need to allow the emerging markets to go at a slightly slower pace. And therefore, I agree with Jeremy that developed markets need to do more and need to look at what they are doing, how they can step up, bring net zero forward, phase out fossil fuels, support the subsidies, support the deliver on the climate finance pledge, to allow the developing world to actually, step up on their side as well.
Yeah, absolutely. And I think this comes to our third main recommendation, which had been that it continues to be that governments back up their targets, these high level targets, which obviously have fallen short even of hopes, but that what targets they have are backed up through binding legislation, including things like more onerous carbon pricing, joined up policy across all levels of government, and greater zero carbon R&D spending. And I think here I have to put in a word here. I run the Climate Policy Index for Aberdeen and work alongside obviously Eva and Jeremy in terms of understanding these things. And what really strikes, and Jeremy alluded to it earlier, is the clash of incentives for many political leaders in terms of short-term pain and long-term gain, or indeed not even short-term pain and long-term gain, but actually viewing climate policy as part of a system rather than as a separate issue. And I think that now post-COP, we have seen some ambitions outlined at a very high level, but what we need to see now is genuine integration into law, right? Being held accountable through legal systems. And that's something that we can't know now. It's too early to say whether there will be a significant advance. But we know for some countries like the United States, it's very hard to advance the climate agenda at home because of the differing incentives for different senators from different states. I mean, at the moment, President Biden's climate plans have been, massively upended and changed because of the preferences of a single senator from West Virginia from his own party. And I think that tells you something a little bit about just how domestic politics has a huge role to play in what is ultimately a global challenge, and makes it all the more challenging. And I'm going to bring Anna in here because we talk a lot about governments and their decision making, but what role does the court have to play in all of this, Anna?
Yeah, so I think, particularly where we're not getting these kind of binding agreements, and when we're not seeing the adequate implementation of credible action plans, the role of the courts, I think, is going to become increasingly important. So previous major agreements, and where you get the publication of significant scientific reports, for example, result in a corresponding uptick in the number of climate litigation cases that we see being brought. So where you get strengthening scientific evidence, that also strengthens evidence that can be put before a court. And where we have new commitments and targets being put into place, that brings new focus on any failure to fulfill those promises, and therefore grounds for litigation. So the courts are becoming an increasingly powerful weapon against inadequate targets, against the lack of action. But I think actually also the reticence of developed nations to make adequate progress with regard to the need to adequately finance adaptation, and the issue of loss and damage will increase the importance of the litigation route. So loss and damage refers to the impacts from climate change that can't be adapted to, and where the losses are significant and often permanent. And developing countries that are least responsible for the problem are already having to devote huge amounts of their budgets to repairing the damage caused by climate change, and that's only going to get worse. And with every fraction of a degree, past 1.5 or even at 1.5, you're going to be seeing this significant loss and damage. So there needs to be an adequate funding mechanism to tackle loss and damage. But because the discussion is often framed using terms such as compensation and reparations, developed countries are pretty wary to really get into that discussion, as it has that potential to lay them open to legal liability once you get into those kind of terminologies. So the outcome from COP with regard to loss and damage, because it's really little more than acknowledgement that action is needed, I think the longer that the response remains wildly inadequate, actually the more likely that litigation will become the focus of forcing that action. So although developed nations are wary of getting too involved in those discussions because it will lay them open, I think actually not having that discussion also lays them open.
Can I just add a qualifier to that, Anna? It's just that you still need a legal mechanism that holds accountable actors that may be outside of the sovereign jurisdiction of the countries being damaged. And that, I think, from a political and an institutional perspective, could remain very difficult, i.e. you might have a case, but if the actor doesn't recognise the jurisdiction of that court, extracting compensation can be difficult. That's one. Second, in many countries, you don't actually have independent courts. So, for example, that's probably not going to be a very meaningful pathway for extracting a lot of action in China, as an example. And then third, if you look at the United States, if anything, the current makeup of the Supreme Court is actually looking to restrict what national regulators can do rather than force them into more aggressive action. So I think maybe just the qualifier is, I think all these things you said are definitely true for a subset of countries and a subset of court systems, but there are others that are quite important for which this could still be quite challenging.
No, I agree. There are these, extreme limitations in some jurisdictions. I think though the power that we're often seeing in litigation cases is around that kind of reputational damage, whether that's at a national or corporate level, and often that is driving some of that change in those jurisdictions where it is possible for these cases to be adequately brought. And I think as we're seeing improvements in the science, particularly around that kind of ability to attribute extreme events to climate change, I think the stronger those legal arguments could become. And even if they don't result in success in court proceedings, what we are seeing is that increasing publicity surrounding those events that is actually often forcing the change before actually there is any need for a ruling in the courts. And I think in those regions where you are able to bring that kind of case, I think that there is going to be a shift towards using the courts to hammer home these points, and I think we will see an increase in that in those legislations.
Thanks, Anna. I think that provides a really useful sense of the interactions between the different institutions in a country, government, the court systems. And for investors, Eva, how does the kind of policy backdrop affect the investor outlook and the ability to invest in kind of the long term?
So I think we mentioned at the start that obviously the credibility of some of the things that are being promised and said is really important, so that investors have certainty and can incorporate that into their thinking. So what we've seen from COP is, I think the signal is pretty clear that there's a strong energy transition happening, and that decarbonisation trends we will see across the globe. That the pace at this stage of that is not aligned with the net zero 2050 world that will keep warming to 1.5 degrees. So we need to understand the related investment risks and opportunities across sectors, across regions, and which assets that we invest in ultimately will be winners and losers of that energy transition, and how that evolves over time. So I think our scenario analysis, climate scenario analysis process, is a really powerful mechanism of incorporating credible policies. So I think we talked earlier about it's not just what's been said at COP, but the next year, and seeing how really these things will be implemented into legally binding actions and nationally determined contributions, can then start maybe shifting the dial when we think about the probabilities we assign to scenarios. And so we incorporate that into our climate scenario analysis, and therefore then understand, how are different regions and sectors impacted under different scenarios and different stringencies of the energy transition, and therefore it's quite important that we think about what pathway do we think we're on currently, and that is unfortunately not a 1.5 degree world.
Great, thanks so much, Eva. I think that's a very useful translation for investors. So if we keep going through our list of recommendations, I won't lie, we're not doing amazingly so far in terms of the translating our recommendations into actual outcomes from COP, but we'll keep going. So Jeremy, let's talk a little bit about our fourth recommendation. Was around addressing the regressive effects of higher carbon prices by offsetting through funneling revenue into progressive policy initiatives, including reform of tax and transfer systems. I guess it's too early to say, right, in terms of the policy translation there. Yeah,
given that carbon pricing itself is woefully inadequate in nearly every economy in the world, there's not a lot of revenue to be cycled at the moment. Even in those countries with, say, stronger carbon pricing, say, for example, in the European Union, a lot of the revenue was actually sort of being used to compensate the emitters in some way, right? So actually it wasn't cycled sort of progressively as such. It was part of the bargain for getting sort of large emitters to actually sign on to the process to begin with. So I think we're at very, very early stage in this. I think we've said before that look, there are a lot of pledges that have been made at COP26. There is a ratchet mechanism that will at least force countries back to the table in 12 months' time. But to me, I'm really looking out for in how many places do we see any meaningful legislative change over the next 12 months, including making carbon pricing sort of more prominent and more aligned with these sort of pathways. But I think it's absolutely true that actually, regardless of whether it's carbon pricing or any mechanism to aid the transition you expect, there can be distributional consequences. And if you want broader political buy-in to the importance of the transition and accelerating the transition, you can't leave the losers of that transition behind, because if you do, we'll have a repeat of what we saw with globalization, where you get a backlash in part because nothing was sort of really done to aid those losers, sort of communities that were damaged, individuals who lost jobs. And so that has to be a vital part of the policy strategy.
Yeah, absolutely. I couldn't agree more. I think people always talk about the just transition, or often talk about it as a separate issue, like let's do climate transition and then we'll try and figure out. But actually, in many ways, a genuinely just transition could facilitate a more effective and efficient transition.
Exactly.
Everyone's on board, you get less of that political backlash, you're less likely to have that electoral swing if everyone feels that they're going to be able to get through it and be, relatively okay from it. So I think that's a really important point to bear out. And then related to that a little bit, in terms of the just transition across emerging and developed countries, our next recommendation had been for signatories to treble the size of the Green Climate Fund and accelerate the Sustainable Development Mechanism to aid the just transition. Jeremy, I might go to you on that.
Did not happen. We can keep that relatively brief. In fact, I would argue that the failure of the rich countries to provide substantially more financial support, whether it be related to historical legacy, whether it be to aid the transition, or let's face it, the enormous adaptation costs that are coming down the pipeline just on the basis of things we can't avoid now, that wasn't provided. The financing is inadequate, and until that's addressed, it will remain a chronic problem and limit our ability to take action.
The report card is not looking good so far. Eva, let's maybe switch on to kind of the relationship between the financial sector and everything that's gone on at COP. And, our final recommendation had been that signatories implement clear climate disclosure frameworks and standards in line with the Task Force on Climate-related Financial Disclosures. Now, I'm going to broaden that a little bit and say, what role did the financial sector have at this COP? What did we at Aberdeen sign up to specifically? And what did the financial sector achieve during the COP?
Well, I think we can maybe end on a slightly positive note there, because I think that people talk about COP26 really haven't been... COP26 really being the kind of finance COP, because the financial sector demonstrated a willingness to play their part on this journey to net zero that just wasn't there in previous COPs. That's some of the feedback that we hear. So we saw, for example, on Finance Day, we had an announcement through GFANZ, the Glasgow Financial Alliance on Net Zero, and that brings together about 450 actors in financial services, including ourselves as asset managers. We have joined the Net Zero Asset Managers Initiative. And it came out with a number that was widely debated, 130 trillion now aligned to net zero. And I think we said very clearly that these 130 trillion is just adding up the assets of those that have joined and said, we want to be part of that journey. But that those assets are not net zero aligned yet. A lot of that is conditional on policies aligning, on clients shifting in that direction as well. And therefore, we really need to understand that and take that with a pinch of salt. But I think the positive is that, and that also applies to us, the commitment is to engage with clients to develop solutions that align with net zero and help evolve those industry standards around what does best practice look like, what does disclosure look like. And what we have seen from the UK, for example, they announced that they want to become the world's first net zero aligned financial centre and make the publication of transition plans, net zero transition plans, mandatory. So that's quite interesting, because that's something that really helps understand how some of these high-level targets are really put into practice in a plan. So for investors, that's certainly something that we look for as well when engaging with corporates, for example. And then the final point maybe to make is that there was also the formation of the International Sustainability Standards Board that was announced to really try and deliver this baseline of what does a global sustainability disclosure standard look like. And so we have seen, I think, some positive steps there from trying to help with consistency of disclosures, and really for the finance sector to say we want to be part of the journey and develop the solutions and help deliver the finance that's needed for the transition, which is trillions, which is significant. So that cannot happen without private finance at the table.
That's great. Well, thank you so much, Eva, for that. I think that gives us a slightly brighter note to end on. But I'm going to ask each of you if you could provide a really brief phrase or a couple of words to summarize your view. That might leave us with a sense of where everyone feels at the end of COP. So Eva, I'll go to you first.
So in a short phrase, I think we've heard a lot of words, and the hard work starts now to put them into practice.
Perfect. Love that. Jeremy?
1.5 degrees is on life support, and its family is debating when to switch the system off.
Great. Cheerful note to end on, as always. And Anna?
Yeah, so I think what I would say would kind of end on a bit of a soundbite, but I think one crucial thing to remember is that the UK presidency lasts until the next COP. So to ensure meaningful advances by COP27 next year, the UK needs to show progress on some of the failings of which it has been complicit, and ratchet up not just ambition but action. And that's really my sort of takeaway thing, that need to ratchet up not just ambition but action.
Perfect. And I have to say, strongly agree with Anna. As we always say, watch what governments do, not what they say they're going to do. And on that note, that is all the time we've got for today. Thank you so much to Jeremy, to Eva, and to Anna for joining me. This was the last in our climate mini-series. You can find our other climate episodes and indeed wider catalogue of episodes wherever you get your podcasts. We'll be back in a few weeks' time discussing our macro outlook for 2022, so please do join us then.
This podcast is provided for general information only and assumes a certain level of knowledge of financial markets. It is provided for informational purposes only and should not be considered as an offer, investment recommendation, or solicitation to deal in any of the investments or products mentioned herein, and does not constitute investment research. The views in this podcast are those of the contributors at the time of publication and do not necessarily reflect those of Aberdeen. The companies discussed in this podcast have been selected for illustrative purposes only, or to demonstrate our investment management style and not as an investment recommendation or indication of their future performance. The value of investments and the income from them can go down as well as up, and investors may get back less than the amount invested. Past performance is not a guide to future returns, return projections, or estimates, and provide no guarantee of future results.